Morning, everybody. Welcome back to the Online Collections Technology Think Tank. For those of you who just joined us, I hope you're enjoying this session. You've just missed the session where we discussed customer engagement. We had lots of questions. It was really interactive, really. We didn't even cover half of what we wanted to cover, so hopefully this session will be similar. Just a quick one before we cover this session, which is going to discuss affordability and vulnerability. I wanted to point to you, we've got obviously you can see in front of you, you've got a panel of options on the left-hand side. On there, you've got an eye for information. That's all about today's event. You've got a questions tab, which is the bubbles that you can see. Please definitely ask questions throughout. We want you to get involved, not only on here, but if you want to share anything on our socials, do that. We've got the hashtag collections tech TT as well. But yeah, feel free to ask questions throughout. We're going to run some polls over the top of the event as well. So it'd be great if you can give your feedback on that. They're all anonymous, so we're not going to share that data with people and stuff, but we will create a roundup, which we'll share on the Credit Connect website next week. You've also got an icon where you can view more about our speakers, and then also point you to the resources tab on there as well. There's different PDFs and links on there. Have a look at that. It'd be great if you can have a look and see if that will help provide a bit of background to some of today's discussion as well. So yeah, have a look at and get involved as much as you can. We really appreciate that. So the next session, we're going to talk about affordability and vulnerability, and this session is sponsored by CallMiner. Now, unfortunately, the chair who was scheduled for this, Vanesa Northam from StepChange, she's unable to attend this session today. She's battling a sore throat and earache this week. Is not well, so unfortunately going to have to put up with me chairing the session today. So yeah, what we're going to do as a start off is I'd like to introduce you to our panel, and then we'll give a brief introduction about their background, and maybe a bit of thought as well about their experience of the last 18 months, if that's all right. And then we'll get into some questions, and any questions you've got as an audience, we'll try and feed them in as well. So I'll start by introducing Alex Woodcraft from Gain Credit. Alex, if you could just give us a bit of background about yourself to our audience, that'd be fantastic.
Absolutely. So I've been with Gain Credit for 5 years now. I look after customer engagement, which kind of ranges everything from customer experience through to kind of collections, through to looking after our efforts around customer vulnerability, understanding vulnerable customers, and helping them to achieve the right outcomes as well.
Brilliant. And then we've got Denise from Lantern. Denise.
Hi, good morning, everyone. I'm Denise Crossley, the CEO of Lantern. We're a debt purchaser, predominantly in the vulnerability space. We have around 3.2 million customers currently, and yeah, I'm running the operation. I'm very hands-on, and affordability and vulnerability is extremely close to us. So happy to be on the panel today. Thank you.
Brilliant. And we've got Frank as well from CallMiner. Frank.
Hi, good morning, everyone. Thank you for joining us. I'm Frank Sherlock. I'm the VP and General Manager for CallMiner for International. CallMiner are a technology company, so hopefully I'll lend a technology aspect to discussion on affordability and vulnerability. We have around about 350 customers worldwide across multiple sectors. Most of our customers work in highly regulated industries, and credit and collections is a key part of the verticals that we're very active in, and vulnerability and affordability very much to the fore within those clients.
Brilliant. Thanks, Frank. Yeah, so following on from our last session, actually, when we had Gary Moffat from British Gas on there, and obviously vulnerability and affordability are obviously going to be key. He talked, it's been a subject past week or so about the price cap and how that's going to affect customers, and vulnerability is obviously going to be key in that sector. But I guess we've got furlough, which has just ended as well. So emerging from the pandemic, I just want to get everybody's thoughts initially on how the definition of vulnerability will change. Be good to start with Alex on that, if that's okay.
Yeah, absolutely. I think I wouldn't say necessarily that the absolute definition of vulnerability itself will change, but I think what will change are the different types of vulnerability that customers experience or could potentially experience will become more or less prominent. So I think, going through the pandemic, you'll have had customers suffering maybe from health conditions or financial shocks that perhaps they've never experienced before, and you've got a whole generation of people that have emerged from, universities entering the workforce since the last recession as well, who've not been through things like this before. So I personally think it's a very interesting time to be looking at this and to be making sure that we as lenders or firms in general are giving the right outcomes to customers, because you are going to see, things are going to be different than they were before. So you need to really be staying on kind of top of your game with that as well. Brilliant.
And Denise, obviously, I know your company really focuses on vulnerability and affordability as a specialism, almost, in a sense. Is that true to say? And it'd be good to get your thoughts on that.
Yeah, I mean, I don't disagree with what Alex said there. Yeah. I think the younger generation are going to find this more difficult. The older generation have been through some sort of recession before. I think things are definitely different. Relying on the bank of mum and dad may not be possible because mum and dad may also have issues. So I think there are going to be some absolute differences to last time, and it's balancing that against what we've seen as the norm, and where do these younger people go to get assistance if mum and dad can't help.
Mm-hmm. Yeah, no, interesting. Yeah, and Frank, I guess from your perspective, it's kind of looking at the analytics and data and helping identify vulnerable customers. It'd be good to get your view on that.
Yeah, I think that if you think about vulnerability, financial vulnerability, health vulnerability, both physical and mental health vulnerability, and we're also seeing digital vulnerability. That one of the impacts of the pandemic was as we worked from home, as we went to self-service, that people didn't necessarily have that human channel available, and it highlighted there's a lot of people of certain generations or with certain perhaps physical disabilities that are digitally vulnerable, and how do you deal with digitally vulnerable. And I think from a financial perspective, I was reading a report yesterday about that the FCA published. It was last year, but some of the stats, and I'm sure Denise and Alex are probably more aware of these than I am, but I thought they were really telling that the 24 million people in the UK have one or more characteristics of vulnerability. The 49% had low financial resilience, 41% were over indebted, 3 in 10 were in financial difficulty. And to echo what Denise said, the majority of people likely to be affected are from the BAME, Black, Asian, minority, ethnic, and young people. So there's a challenge for organizations that have to, from a regulatory perspective and from doing things right for the customer, to deal with vulnerability. And hopefully, companies like ourselves can help with that. And we'll talk a bit more about that, Colin, as we go forward.
Yeah. And I guess be interested to see, I guess you've kind of covered it in a way, but the role of technology when assessing income and expenditure, you got any thoughts around that?
Yeah, I think that our job isn't to say whether the plan or whether the settlement was appropriate, but what we can do, it's very difficult, I think, for organizations at scale to be able to truly assess whether or not the I&E conversation was robust, fair, and led to the right outcome. What we're able to do across multiple channels is to ensure really that the process of doing income and expenditure is appropriate. Where the priority bills covered, was other household and income and expenditure covered appropriately? Did the consumer agree with the disposable income? Was the plan and settlement agreed? Did the customer understand the implications of not keeping up with the plan? And because we analyze 100% of the interactions, we can guide our customers to the calls that are of interest, where there may be a problem, where there may be dissatisfaction, where there may be trends of vulnerability, where things were perhaps not covered appropriately, and use the time of the QA and the supervisors to focus on the calls of interest, rather than perhaps do some random or sampling where you're looking for a needle in a haystack. So I think we help our customers to focus on the areas that they need to pay attention to in these I&E conversations.
Okay. And Denise, do you see a role technology at the I&E stage?
I think there is, and echoing what Frank said, it's about getting down to the root cause of things. But for me, it's about keeping things simple and making sure you ask the right questions. Because if you don't ask the right question, you won't get the right answer. And you can have as much technology in place as you like, but if you get that bit wrong, then you're not going to get the right answers, and then you're not going to get the right outcomes. So I think less complication is key, and speed is key, and less complicated. Because actually, Frank touched on it earlier about digital vulnerability. That's very true for older generations. I mean, I've just come back from Spain and yesterday, and looking at the level of checking and forms and getting phones out, and I'm looking at older people struggling with it. It's going to be no different in this situation. We've got to make things simple, because they're going to have to be more digitally savvy, but they're not going to get there.
Yeah.
So
nice.
I think that's a big piece.
Agreed. And Alex, I guess you got a slightly different angle on that from the type of business you've got as well.
Yes, so I think, for us, I think technology is a key component to getting all forms of forbearance, not just the income and expenditure, but all forms of forbearance right. And I think the pandemic really highlighted that, because you saw a greater than usual number of customers who needed help or just needed reassurance if they didn't need help. And, we were able to employ a range of, digital automated tools to help customers achieve the right outcomes, make sure that they had, a proper I&E check was done. And, digitalizing things, automating things means great. You can do additional checks. You can, scan portfolios and things. You can have a mile-high view and a kind of a 1-inch view as well. But what we also found was that throughout, it's where the technology ends that I think is perhaps most interesting, because there will always be some customers, I think, Denise alluded to, potentially it's older customers, or it could just be customers who have accessibility issues, and that perhaps a digital journey isn't the most appropriate one for them. That, actually for us, it was growing our human workforce, if you like, our agent workforce, who can actually, talk with the customer, talk them through their options, perhaps even develop something a bit more bespoke for that individual customer, depending upon their circumstances. And I think, the technology is not going away. You absolutely need to be investing in it, and it can generate, savings for a business. It can deliver a much better outcome for the customer. A lot of customers don't want to necessarily pick up the phone. There's a degree of embarrassment, and what we certainly as a lender need to do is to help people overcome that barrier, to know that we're there to offer them support, and we want to help them. And so I think you end up offering a range of touch points, a range of channels for people to come in and engage with you. And I think that was probably one of our best lessons from the pandemic, was how we can blend automation, technology, chatbots, those sorts of things, with the human element for those customers who are most in need of it.
And I guess, do you think there's more? We're talking more about affordability, I guess, but I don't know if you were talking about vulnerable customers as well. But do you think there's technology in place for helping vulnerable customers? Obviously, there's a group that we mentioned there that probably it wouldn't fit for. But have you got any thoughts on that, Alex?
Yes. So I think that there will absolutely be a place for technology there. I think digitizing self-disclosure, I think, is very important. I think, enabling customers to disclose vulnerabilities in a more anonymous or private fashion, may make them feel more comfortable. But I also think there are ways that people can start to employ technology to, if not definitively identify vulnerability, but give you some indicators of it, or perhaps suggest that customers may need additional support, that you can then prompt to your agents or to whoever will be having a contact with the customer to enable them to have a more rounded discussion. You don't just, it's not about just sort of putting somebody in a box and going, you're this, now we must treat you like that. It's trying to kind of build a 360 picture. And I think, whether web analytics, call analytics, semantic analysis, all that sort of technology can help you build a more rounded picture of your consumer and help make sure that they achieve the right outcomes.
Okay. And Denise, from a vulnerability angle, you obviously mentioned the older people and their generation probably not struggling, but just not identifying with the digital technology. What have you got any thoughts on that from a Lantern perspective?
Yeah, look, digital is important because it enables things at speed and it enables privacy that Alex just mentioned then for some customers that don't want to call in. But we find that customers still want to use all channels, and it does depend on what is happening in their space today. They may have had a whole digital journey with us, but something happens they need to speak to someone about. So I worry that we're going to go too digital if we're not careful, and that companies shouldn't put that ahead of looking after the customer, because it is more profitable to be digital. We know that, but it's not always the right answer. So I think it's a real blend of everything. But I certainly think there are things that you can get smart with in technology that would enable you to focus on the groups that need that one-to-one care more. Going back to what Frank said at the outset, which is sorting the wheat from the chaff and really focusing on those that need bespoke attention. I think that's key. So I think there is a place for technology, and I think it will develop. We need to just be careful we don't end up putting everybody in that box, because that's not right. Yeah.
And Frank, any angle on that to you?
Yeah, I mean, I think Alex and Denise spot on. I think you have to have appropriate channels for customers to use, and you can use technology. If you think about virtual assistants, for example, doing things with virtual assistants rather than with people, and then perhaps the same consumer breaks out into a conversation with a live agent in the contact center. What was it about the virtual assistant conversation that may have led to the breakout into another channel? Can that be fixed? I think that's one aspect of looking at journey analysis and journey management to ensure that the digital channels are working appropriately, efficiently, and effectively. I think the other side of it is when we think about vulnerability, it's people can just miss the cues on a conversation, not because they're bad people. They may be distracted, they may be focused on a particular element of the conversation. So for example, if I said, yeah, sorry, I haven't called you back, I've recently come out of hospital, that could be an indication of health vulnerability. It may be appropriate, therefore, to question if everything's okay, rather than miss the opportunity. And using technology to provide real-time cues to agents to say, hey, health vulnerability, take a moment, rather than miss that opportunity, is certainly the sort of things that technology can help with. Some of our clients in energy, for example, they have a priority services register where people who perhaps are on dialysis machines at home, for example, that they need to be notified in advance of power cuts. And so checking, I think, that vulnerability is identified quickly and effectively, and helping the agents to manage that vulnerability and that dispositioning of the vulnerable customer is really, really where we come into play on the whole aspect. We help to manage vulnerability.
Yeah, and I think where technology helps is understanding the why.
Yeah.
So why is something happening, or why is a customer asking that? And then using that information and intelligence to enhance your systems further.
Absolutely.
Brilliant. And Alex, do you think technology can go too far, I guess, in some ways, in terms of looking at affordability and vulnerability as well? Can you have too much of it? I guess it's a bizarre question, but it'd be interesting to get your thought.
Yeah, so I don't think you can have too much technology per se. I think what matters is how you use it and where you use it. And it's understanding that the technology in and of itself, it's a tool at the end of the day, and it can be used to great effect, also not so great effect. So, for example, if you are automating all your journeys, but you're not providing opportunities for customers to have a more personalized or bespoke outcome based off their unique sets of situations, I would say actually your technology is kind of hindering you rather than helping you. It's one of the reasons why we've been kind of, bolstering our call center and our team of agents here, because actually, yes, you might be able to have solutions that will work for, say, 80% of your audience or 90% of your customer base, but actually there will always be some customers with unique circumstances that need something more bespoke. Now, 10, 20 years from now, when kind of AI and things get, much, much smarter, and, you can almost be talking to Google on the phone kind of thing, I'm sure, we can perhaps kind of come to something there. But even then, I think it's all about how you build it and how you employ it. And I think it's about how you leverage that technology to make sure you are still looking at your customers, understanding what the right outcomes are, and then making sure you're delivering against those outcomes rather than just maybe introducing new bells and whistles, for example.
I agree, because teams, data and technology teams, they're quite geeky and they can get a little bit lost in telling you loads of information that actually is pretty useless. So I say to my guys, you need to ask yourself, if I found that out, what would I do with it? Because if you're not going to do anything with it, what's the point in getting it? Because you're right, people tend to go off. It's like a bit of a spider's web. It's like, no, you need to come back in here and just look at the customer, because all the bells and whistles are great, but if they're not useful, then focus on something that is. So I think you need to be focused in technology, and the techie guys are serving the customer is the operations. So it's what do operations need and want, and then build that around it rather than the other way around. Otherwise, I think that's quite dangerous. Just to echo what Alex said.
I absolutely would 100% agree. We talk about, Denise, actionable insight. If the insight isn't actionable, if it doesn't make a difference to the consumer or the agent, or the business, it's just data. It's meaningless. Yeah. So we work with our customers around, looking at things that could be systemic in nature, or can be, related to a particular site, a particular process, a particular product, and ensuring that insight is actionable. As I say, actionable, no action, it's useless insight.
Yeah.
And I think the other thing, Colin, is we often forget. You mentioned about the pandemic and the work from home and everything else. We often forget that it's not just about employee experience and making the business more efficient, more effective, more profitable. We have to think about the employee experience, and can technology also help with the employee experience, where there is no, if the agents are working from home, there's no shoulder surfing, there's no visual indication a supervisor might get of agents suffering stress or anxiety, there's no colleagues talk things through over a coffee. And the agents do a great job, but technology can help to look at the agents. Is there an increase in dissatisfaction or a lack of empathy, or other simple things like audio and audibility challenges? Is there more stress and tension in the conversation, and how can we then intervene to help and support that colleague in dealing in a very difficult environment, a very strange environment in the work from home?
Okay. it'd be good to know as well, Frank. So some of the technology you use at present to help measure affordability. Have you got any clients who examples at all?
So our role isn't to measure the outcome, Colin. Our role is to measure that the process was effective and efficient. That all things were covered. They were covered appropriately. There was agreement and alignment between the organisation and the consumer. There was signposting was appropriate, and there was an outcome to that conversation that both parties agreed with. If somebody said, "Hey, we arrived at a plan that was £50 a week or £50 a month," our technology isn't going to say £50 a month was appropriate based on the conversation, but it will say that conversation was clean, precise, and accurate. Whereas conversation B, council tax wasn't covered. They didn't cover any personal loans. There was elements of dissatisfaction. You need to look at that one because it doesn't look right. So it just helps our organize. I say it guides our clients to the interactions. They could be web chats, they could be emails, they could be calls, but the interactions of interest where things just didn't look right, or conversely, where there is examples of excellence, that can be on best practice that can be used perhaps to share with other colleagues. So both ends of the spectrum.
Yeah. So Alex, I guess, how can we really ensure that customers tell us what they really can afford and what they're suggesting? How can we really measure that through affordability? Is there any thoughts on that?
So I think when it comes to the collections process, I think it's slightly different to what you might see upfront at origination. I think within the collections process, you are the balance outstanding is set for lack of a better term, and you are looking to work with that customer to, having had a change in their circumstances, help reduce that balance, or leverage other solutions to help them resolve the situation. I would say that you want to kind of be as standardized as possible. I think I think you talked a bit about wanting to make sure that you were covering everything, et cetera, that you'd make sure you'd cover the council tax, that you'd covered any other loans or other things like that. So I think it's really important that you do have standardization there, and I think technology can be a great enabler of that to make sure things go through. It can also be great because one of the challenges you can sometimes find on the phone is the customer may not have all the information to hand, and so rather than several phone calls, you can actually kind of make sure they've got all the information, or they can sit down and work through it. I think a key part of ensuring that any arrangement is affordable at the back end is sense checking the amount with the customer. So you can do the best income and expenditure in the world, but customers will make mistakes or will be unsure about things, or may, when they actually have done the additions and subtractions, look at something and go, there's no way I could possibly afford that amount per month given my present circumstances. And so it's then as a lender and would be interested in Denise's views from Lantern side of things as well. We would go, well, actually, look, what can we do to make this more flexible to meet your arrangement? Obviously, you don't want to perhaps have a customer sat there in debt forever. You want to make sure that they are, paying down what they can. But at the same time, you need to recognize that those circumstances can change and can vary. So I would say the first couple of things would be making sure that you do that sense check. And then if the customer is unhappy with it, being flexible with the customer to make sure that they can, you can offer them a payment amount that will enable them to still pay every, to be affordable for them. And then the second thing I think is, even though that arrangement may have been set up, is having that continued flexibility such that if a customer's circumstances change further, for example, maybe their income reduces further, or perhaps even their income increases, you can then look to sit down and rearrange that arrangement with them to make sure that you are always helping the customer with their present set of circumstances, and that you're not being too rigid. And I think this is where you kind of draw the bounds between technology being an enabler of this, and then kind of common sense / that human touch, to make sure that actually at an individual level, the customer is getting what they need in that circumstance.
Yeah, and I think from a technology point of view, we built something here several years ago, which was pretty painful to build, which was our single customer view. But it's now really come into its own, because as an example of that, if we've got a customer, we've got a couple of debt lines and they're paying £30 a month, and they only told us last week that that's all they can afford, and we can see that on an income and expenditure form, then if we buy a debt today, we don't have to have that conversation. We don't have to go through all that again, because we can see that. What we can do then is go to the customer and say, we bought another debt line for you. We know you can only afford 30. So now you can pay 10 off each rather than 15 off 2. And then it's not asking them to pay more money. And technology enables us to do that. So I agree with Alex. It's, technology is a facilitation. It can't make the decisions, but it can advise you as to what the situation is, and then you can make a human decision on that. I don't think you can expect it to have all the answers, because vulnerability, as we've all said, has many guises, and because of that, you have to have some human interaction.
100% agree. I think technology is a facilitator, but the human end, Denise, is absolutely where the rubber meets the road on the decision. So
good. And I guess so. Do you think technology and data can help identify and minimise the time spent on affordability assessments, at least in the future?
I can give you a sort of example of that I've seen in one of our clients. So the consumer does the I&E on a web form, yeah. So the web forms are assessed, and then if there's problems with the web form, an outreach is made to clarify content on the web form. And with the use of what they call APIs, application programming interfaces, the agent who makes the call can be guided in real time that, you need to, the council tax disclosed seems inappropriate for the postcode. There's no disclosure, and make sure that therefore rather than go through the whole form on a call again, they just concentrate. They use technology to ensure that the agent's going to concentrate on the areas that matter to support the agent, simplify the conversation, and make the best use of customer time.
Mm-hmm. Alex, any view on that in terms of the?
I absolutely think it can make things more straightforward and simpler for us as a lender to engage with customers. I think you get, I think as Frank was saying, that you get this kind of more standard approach to making sure that all the questions are asked and answered. I wouldn't necessarily say it makes the I&E itself a quicker process. I think the cost to a firm would reduce. You can introduce, through doing things online. But what you might find is, I would say that the length of time that a customer spends on the I&E becomes more right-sized. So, for example, a customer who's got a particularly complex set of circumstances can feel like they can take that bit longer to do it if you're implementing kind of web forms or other forms of technology, rather than perhaps sitting on the line with an agent and worrying that the agent's got another call to go to. Even though the agent would sit there and say, "We'll take as long as you need," you can kind of have it so that actually they can do it in an evening. They can make sure they've got all their paperwork out with them, or got their bank account open on their phone, for example. So I think there's definitely cost savings for businesses. I think there's a better experience for customers, but I don't think it's about making it quicker for customers. I think it's about making the journey right-sized and fitting that particular customer's circumstances or needs.
Mm-hmm. Denise, any?
Yeah, I mean, personally, I just think the industry still needs to get to a place where customers input that information once and it's shared. And we're still not there. And I find it highly frustrating in this technological world that we haven't really achieved that as a sector. because that's what it needs. It really does need that. But everybody's got to buy into it, and that's the problem. Not everybody buys into it, and until they do, it's not going to work.
Okay. Good. I've had a couple of questions come in. Just says quite a long one, so forgive me. So someone's asked, given the individuals and physical and mental health vulnerabilities have significantly increased, propensity to be financially vulnerable, what do you see as being the provider's responsibility to being proactively identifying and supporting these customers, and how can this be done? Big one there. Anybody thoughts on that? It's a big question and a long one.
Yeah, no, I think certainly as lenders, and I can't speak for others, but as lenders, I would say that we absolutely have those responsibilities to support those customers. And again, it comes down to this kind of customization or personalization with regards to treatment. I think the key challenge, and it was kind of alluded to in that question, is identification. So it's, you can't offer somebody solutions or offer this help if you don't know that they need it necessarily. And so it's making sure that you are approachable to the customers, that customers know they can disclose, when you're sending out, for example, we're talking about collections, your collections messages, that you have strong statements in there that's not just about, please pay back X, it's please talk to us to help us understand how we can help you. And I think it's really how do you build that rapport with your customers to enable them to disclose that information to you? Because again, it's private information. They may not necessarily want to disclose it up front, or feel like they should disclose it up front. But if it is impacting them, you want to be open, honest, and transparent with your customers so that they feel comfortable disclosing it to you, and then you can look at their specific, unique circumstances and offer something in response to that. Would be my answer to that question.
Okay.
Yeah, and for me, it's more of the same. It's about identification, because if you don't identify it, you can't manage it properly. So training of staff is key, and to make sure that it's consistent, so that if a customer speaks to one person in the team, they'll get the same response as someone else, because often that doesn't happen. I think books we buy have sometimes been because lenders have I guess tried to do the right thing and pops them over here, but you have to keep revisiting them, and it's doing something different with them and making sure that it's bespoke. But again, understanding the circumstances, and is that a true vulnerability? Is it a short-term vulnerability? Is it medium? Is it long-term? And then making sure you do the right things after that. And everyone knows they have to do that. But I think we're going to see more of that becoming a problem, of the identification of it. So I think training is key around, okay, what questions need to be asked? What probing needs to be done post furlough ending, post various taxes changing, government subsidies, etc. Because those questions may not be there today, or may not be deep enough today. So it's continual reviewing. What are you asking the customer to make sure they get the right journey?
Yeah, definitely interesting. And we've been getting a couple of questions coming in around, and we're deliberately trying to avoid this because the next session covers it, but around open banking. I knew they'd come eventually, and they've come in their droves now. So, and we didn't want to talk about open banking for a reason, because it's just focused on a particular subject. But anyway, someone's asked, is the market going to see an increasing adoption of open banking technologies to improve sustainability and affordability? Anybody fancy taking that question?
I'll be honest with you, I don't think it will sit in the collections world. I really don't. I think opening your bank account when you need something and you want money is different to opening it to someone collecting from you. And I think there's going to be a long time till customers trust that open banking offering for collections. I'm not saying it will never happen, but I think it'll be a long time until it does.
I think I would agree with what Denise is saying. I think there would be perhaps some reticence on customers' parts to disclose that. I think it's a channel. I think it's a, I think, there's, wouldn't necessarily be a harm in offering it if customers wanted it. The one thing I would caution, though, to be careful with is open banking. It's kind of like with a credit file. It's great at looking backwards. It's not so great at looking forwards. And this comes to open banking is not a panacea here. You need to look at the open banking data with an understanding of what's caused the financial disruption or the disruption to the customer's life. Is it that their income has dropped? In which case, you kind of want to almost ignore or at least asterisk or ask more about their previous income statements, and maybe you can rely on the expenditure data. But likewise, if they're also changing their expenditure patterns as well. I mean, if customers are multi-banked, it gets more complicated. I think there will be a place for it. I don't think it's going to replace the asking customers questions, and then even once you've got that number, actually sense checking that number with them and going, is this, does this work for you? I don't think it's going to replace that.
Frank, have you got an angle?
Not really. I think this is my esteemed fellow panelists are more into this. But what I want to do is go back to something Denise touched on the last question, if you don't mind, Colin, about cool. making sure that agents are trained in how to deal with vulnerability and the types of questions and probing that they need to do. I think technology has a play there as well, to ensure that training is consistent, that people are doing things that they should be doing, and are there any outliers or learnings? And when you look at the data at scale, I think you very quickly be able to see whether or not that training has been appropriately consumed by all of the teams. So unfortunately, open banking isn't my bag.
It's all right. But I'm trying to tell the audience, but they won't listen. It's the next session. It's the next session, guys. Tune in for that in a minute. But I've got one final question, I think, that's come in. It doesn't mention open banking, but it might allude to it, so let's be careful. How does technology help with the identification of vulnerability specifically? Does it use keywords, spotting, or emotion measurement, or both? Has anybody come up with
it's probably one for me.
Go for it.
It's a combination of both. You can't just say, just because someone says I haven't been feeling very well, is that in itself, a sign of health vulnerability? It could be a leading indicator, but it's then up to what Denise said about the training and the guidance of the agent to perhaps probe deeper. Keyword spotting is not the way I would recommend to look at vulnerability. I'd be looking at it both contextually and in relation to the conversation between the agent and the consumer, rather than relying just on keywords.
No worries. Okay, well, I think we're nearing the end now. I'm conscious that I'm going to throw loads of open banking questions at you all, and I'll try and transfer them into the next session maybe. But I think we'll round up now, if that's all right. And thank everybody who's got involved with their questions and their poll responses. And obviously thank brilliant responses there from Denise, Alex, and of course Frank, and thank them for their insights there. And of course CallMiner for sponsoring this session. I think we're going to have a break now, actually, but what we will do, if we can, some of those questions we've stored. So we'll put them into our review next week, along with the poll results, which should be quite interesting as well, and share that in a write-up next week. And I'll get to some of the guys on this discussion to give their thoughts through that. We're going to take a break now. Next session starts at 11:55. A little bit of a long break there, but we are. And I think most of you want to tune in for this one. Open banking collections technology. I'm not sure Denise will. But no, it should be interesting anyway. Sorry, Denise. No,
I will still listen.
There is. I will preview it a little bit, and we've got a guy called Tom Feast. I'm not putting any pressure on him, obviously, from PSA Finance, who's going to talk about that and collections specifically. And you think, he's probably interested in the lending angle, but it'd be great if people want to tune into that, do that. You can register now if you haven't already done that. there's a link in the sidebar which gives you details about the next event. So let me finish this session and thank everybody, and we'll see you on the next event.
Thank you, Colin.
Thanks, everyone.
Thanks. Bye-bye.
Thank you. Bye.